Thanks so much for coming back. This is our first really retail-focused panel of the day, and it's one I could talk about myself, I'm sure, for 30 minutes, which we have here today. It's about trading psychology and strategy. Is trading more about strategy, or is it more about psychology? This panel brings experts to discuss our biases and how they shape our decisions, and whether discipline can outperform even the best tactics. Please welcome Hormoz Faryar, the Managing Director at ATFX Connect for the Middle East and Africa, who's going to introduce our panelists and lead the discussion. Take it away, guys.
Thank you so much.
Thanks, Adam.
Thank you. Thank you, Adam.
Thank you.
Hi, everyone. Welcome to the strategy and psychology session for trading. My name is Hormoz Faryar from ATFX, and these gentlemen are also from ATFX. I'm going to let them briefly introduce themselves, and then we'll jump into the panel.
I'm Linton White. I'm the regional head of ATFX Africa. And for purposes of this discussion, I have been trading for 15, maybe 17 years now.
Hi, thanks, Linton.
Gavin.
So my name is Gavin Hendrikse. I'm the sales manager at ATFX Africa. I've been client-facing for a very long time, and I'd like to share some of the experience that I gained watching what our traders are doing on the charts.
Hi, good morning everybody. My name is Caleb Martin. I'm a sales manager at ATFX Africa. Through my history with leadership and life skills development, I think my key focus here today and my experience with clients is really around the psychology and assisting guys or clients reach their full potential.
Great, thank you. My first question is going to be, actually, I wanted maybe Linton can sort of define the definitions of strategy and psychology in trading. What are we talking about when we say strategy and the psychology of trading? What is the basics of how you define that?
Sure. So, I mean, in a nutshell, you can't really have one without the other. You've got to combine them successfully in order to be successful. But what defines the strategy, I mean, there's literally hundreds of trading strategies out there. Some are focused on technical analysis, some are focused on fundamental analysis, what's happening in the world and in the market. And some of them are a combination of the two. They combine fundamental and technical analysis. So you could be using pure price action with indicators on a chart as your strategy, or alternatively, you could be watching the news with regard to Trump and the tariffs and trying to profit off of that. And that is specific to your strategy. The psychology side is, what is your mental frame of mind when you click the button? What is it that you're thinking about? Are you positive that your strategy is successful? Are you positive in the success rate of your strategy enough that you are willing to click that button confidently without being worried about it? And are you in a position where you can mentally take a loss if it goes against you? And I think that from a psychological perspective is probably the biggest thing that traders battle with is either putting a stop loss in place in the first place, or constantly moving it thinking, it's going to turn now.
Yeah.
I'm just going to move it another 10 pips.
Yeah, exactly. Gavin, it feels like the strategy doesn't have anything to do with the emotions. Is that like?
Yes, so strategy is your approach to the markets. It's the information that you're interpreting either on the charts or through news or in different ways.
So it's more like the direction, but no emotions.
No emotion. That's a strategy. What am I going to do? What is my approach to the market? Rather, strategy is how I'm executing the trades, how am I interacting, and then psychology is all about me. What is my goals? What is it that I'd like to achieve from the markets? And how you can manage that, emotions.
Yeah. Caleb, maybe we can jump to the sort of the question of what have you seen in the market? What are some of the experiences you've seen in the market when it comes to this trading psychology versus strategy?
So that's a fantastic question, and I've been doing a lot of research lately on a concept called schema, which is really an unconscious bias. So the way we're brought up through parents, teachers, peers, media, and our environment shapes the way we think, what we do and ultimately the results that we get. And those unconscious biases, and I'm going to use Donald Trump as an example, depending on whether you like him or not, I'm finding a big play at the moment that there's an unconscious bias to decisions that are happening at the markets at the moment that I'm seeing starting to shape a lot of traders' decisions based on how they've been brought up, etc. And it's really affecting, and that's where we speak about the strategy side of things, is being able to separate the two and interpret the market without that unconscious bias towards it.
Yeah, it looks like people are like, for example, 10 years ago, I used to like to trade euro dollar a little bit, just for myself, just to be in touch with the market. And these days, for some reason, I don't like euro dollar, and I'm trading only gold. And I heard that 80% of the market's trading gold. So somehow I've been swayed to trade gold and not euro against dollar. And it looks like there's some kind of there's a story there where we're doing these things for, I'm not sure why I'm doing that. Like, you know what I mean? It's like a
Well, I mean, I can give you some perspective, like what I think has happened. You know, like 10 years ago when I was trading, I think I was in a similar boat to you. You know, euro dollar is cheap. There's a lot of liquidity. It's something that you'd be able to, you know, trade constantly, cheaply, without too much interference. And I think the issue now is interference. So we're in a digital age, right? So there's access to information. It's at your fingertips all the time. And you know, we hear a little peep about something happening in the States, and it affects the market. And somebody has a view that he shares on TikTok or Facebook or wherever, okay, and this goes viral, and all of a sudden we are now in a space of influence where our view on the market has been influenced by somebody else. Whereas 10 years ago, that probably wasn't so much the case. The access to information wasn't so readily available.
So both the psychology side and everything's pointing towards gold. I know, is that what you guys are seeing in Africa, where people are trading more gold? Is there more gold strategies, more psychology of it? Why is, like, I moved to gold for no reason. I don't know how, when, but maybe you're seeing a lot of gold as well here.
I am. And it is because, okay, to me, I see clients are moving towards gold, for instance, because of the volatility on gold specifically at the moment. There is a great influence on that they're leading to gold. I feel that a lot of clients, they want to get to an outcome as quickly as possible, and they feel that trading the most volatile pair can get them to that outcome as quickly as possible.
So what I found as well, you know, since COVID, Russia and Ukraine war, Trump and the tariffs, for the past 4 or 5 years on social media, there's been a big shift towards, you know, saying gold is safe haven, people put their money there, etc. And I think it's quite similar to a couple of years ago with NASDAQ. Like, in essence, you know, since inception, it's just trended upwards. And, you know, why would you trade against that? And you just, you know, hold long positions. And I think gold was in quite a similar space for the past 4 or 5 years. And then similarly to a lot of the questions, and I know we spoke about it at length yesterday, with the prompts that you might have. So depending, and I think the input is also vitally important. So you ask a question on Google, for example, and then you're starting to see Facebook, you know, start showing you stuff based on what you search. And this whole ecosystem is designed to feed you what you're looking for. And I think the big shift at the moment has really been gold, gold, gold.
Yeah, I mean, yeah, it looks like you said, people are trying to make money wherever they hear more news. So it's almost like we're swamped with all this information. And if I don't hear enough about euro dollar, then I'm going to start looking at gold. And I think, you know, even with the whole Trump story, somehow gold fed into that, where people said, you know, gold's going to go up or down because of his election. So it must have been sort of interesting to see. But I'm wondering, like, have you guys seen an experience of the psychology segment of your brain? Like, if the state of mind you have, has it got a lot to do with how you perform, in your opinion? Linton, like, I think you perform well when you're, you know, when you're in a better shape.
I was hoping you wouldn't ask this question because I think I'm uniquely qualified to chat about it. You know, psychology and trading, as I said in the beginning, they go hand in hand. And I think that we, as humans, we are very easily influenced by each other, but also by ourselves, right? So if you find yourself being very successful over a period of time with your trading, you almost become a little bit blasé. You become a little bit aggressive, and you start thinking that you can't get it wrong. You start leveraging a little bit more. You start taking a bigger lot size. You know, I remember when people said Nasdaq's going to hit 10,000 and fall through the floor, and I remember saying to them, but why? You know, and I didn't understand the psychology behind that, and it didn't happen. So we kept trading through that. But what did happen was COVID, and I saw, you know, fellow traders go through situations where psychology really affected their ability to be profitable in the market. You know, the uncertainty of your environment can have a very big impact on the decisions that you make. And I personally experienced that. Without going into, you know, too much detail, I ended up very ill and in hospital for quite some time. And, you know, I was trading while I was lying there high on morphine. And I don't think that was, you know, probably the best psychological decision that I've ever made.
So you lost all your money, did you?
Well, I think the interesting thing is, and you know, don't quote me on this, but the interesting thing is that while the morphine was there, I did exceptionally well. You know, like the trading was amazing. Well, maybe what I was just seeing was
you were
amazing.
more relaxed, or you saw. I don't know. Yeah.
You know, but it was more the after effect of, you know, coming out after COVID and then dealing with the mental state of mind of what you've been through. And personally, I thought I was ready to get back into the market and start trading, and I made a lot of wrong decisions, and I traded against my own strategy, something that I've never, ever done before. I made a decision that I had never made before in my trading career, and I took the biggest loss that I've ever taken in 2021. And without giving you the exact number, I probably would have bought a few houses in Cape Town. So it was a substantial knock for me, and I think that the, you know, understanding that psychological effect on my trading has really repositioned the way that I see it, and has obviously sent me on a mission of trying to remove a lot of the human element and bringing in AI and things like this to try and circumvent the psychological effects of trading. So yes, to answer your question, it was
yeah, there's something to being relaxed, I guess.
Yeah.
Maybe when I heard the hedge fund traders are in Cape Town, maybe they're sitting in the vineyard sipping wine and trading, and it's more relaxed. Maybe that's the psychology of it.
yeah.
You know.
If it works.
Yeah. Caleb, anything else to add on the sort of bias and any stories on trading stories?
So I think in recent times I've had an experience with a client, and we laugh and joke about particularly NFP. Whatever he decides, I say to him, just do the opposite.
Whatever you decide, do the opposite.
And particularly, I think that you know, around what's happening in the world, what I'm noticing again, going back to the unconscious bias, is the prediction of this is not necessarily easy. And you know, he's taking a couple of hits, etc. And one of the concepts around this that I sort of explain to people, and it's a small little story, if you just bear with me, is if we had to rhyme the answer to a question I'm about to ask you with the word oak. So another name for a funny story is called a joke. If you have no money, you are broke. And another name for Coca-Cola is Coke. But if I ask you what the white part of an egg is called, a lot of people would say yolk. And when your mind is directed on a certain path, it's quite difficult to shift it into another direction. And the answer is albumin. And a lot of that is also happening in the markets now. And that's where I think there's that symbiotic relationship between strategy and psychology. And I was explaining to a client earlier the attitude about practice how you play in sport. It's really trying to simulate the environment so that your brain identifies those patterns unconsciously in a game. And I think that's where getting a tried and tested strategy and making it adaptable is now becoming ever important.
Yeah. sounds like the psychology is just more negative than positive, and that maybe that's why, I don't know, you guys, like, maybe that's why there's more robots and AIs and you know, stuff trading, because they take the psychology out somehow. I'm not sure if that's a benefit or not. But I'm sure you're seeing more and more of these automated strategies here in Africa, right? Where people subscribe to automated trading strategies
Yeah.
to get the psychology out.
Yeah, definitely. I mean, we support automated strategies on our platform as well, with very little restrictions, and it's for that very reason. You know, I think that if we don't get on the AI train and we don't get on that technology train now, you're going to miss the station. You know, and with the pace at which these things are advancing, we've got to create a space for it, and we've got to allow it to run its course and to be available on our platform. I think psychology from a trading perspective is definitely more negative than positive.
In some cases,
yeah.
unless you're on morphine.
You know, even if you're in a really great frame of mind and you place 5 good trades in a row, that can be dangerous too, because you start thinking you're invincible. You start thinking that you're not going to get the trades wrong. So from a psychological perspective, it's are you a person who has the ability to just remain constant and consistent the entire time? And for 99.9% of us, that's impossible. You know, you wake up in the morning and you get out of bed and you stand on your wife's heel that was, you know, next to the bed, and that changes your morning. You know, I'm speaking from experience there too. You know, a bad cup of coffee or just a conversation with a colleague that didn't go down well can really have an impact on your decision-making process for the day. So yes, AI, bots, etc. I believe that is going to be a big move in our market, and I believe that we're going to see a lot of changes from that perspective.
Yeah, I'm going to let the audience ask your questions in a few minutes, so get your questions ready for this panel. Meanwhile, I want to ask a little bit about the social media side. Well, the thing is, so I don't use social media much. I'm not on Facebook or Instagram. But again, I got influenced somehow, and I don't trade euro dollar, and I'm moved on to gold. So somehow I hear it, I got it, and I trade more gold. So the question is, what's the impact here? Is the social media, is that maybe 90% of it, where it's pushing the traders? Is that where we're heading? Like 10 years ago, 15 years ago, there was no social media. Now, is everything just being pushed around by this social media, X, you know, Facebook, where people are trading? Why isn't, you know, everyone trading, I don't know, local stocks in a certain way? Is it just, is it social media doing all the work?
I see social media is driving a huge factor. It's driving a huge volume of clients and influence their decisions in what they are making, especially on the charts. Like Linton pointed out, you have a lot of information at your fingertips. And especially on Google, you're searching whether it's Euro, USD, whatever it could be. And now you're seeing a whole bunch of social media posts regarding that topic. But each person is sharing a different approach, a different sentiment. And I see where psychology plays a part is where you start trying to follow or adapting a herd mentality. You're going on what someone else is doing, on their analysis, and not understanding your own approach to the markets at the same time. So yes, social media does play a huge part. It has a huge influence. And it's good and it's bad as well. There's a lot of good information out there.
Yeah, it's a very good point. You know, not understanding what you're being fed, kind of like, if I don't understand what I'm being fed and I act on it, that's kind of...
Yes. So, yeah, you need a solid foundation. You need to know what it is that you are doing in the markets. The psychology part is a huge factor to have that narrowed down. I would often advise clients to take a step back, try and understand yourself. What it is that I want to achieve on a day-to-day basis from the market, what I like to achieve over the next 30 days, what is my ultimate goal, and to break it down step by step to get you there.
Yeah, Caleb, we do quite a lot in Africa office. We do quite a lot of training, right, on strategy for clients. What's available on on the ATFX Connect Africa website on this topic, essentially?
Okay, so you can go onto our website and there is learning material, but I think more importantly, we've got two amazing gentlemen in the name of Anthony James and Francois Duplessis. I almost want to say Anthony's role is really like going to gym. The treadmill is going to meet you where you're at. Okay, so if I were to go run on the treadmill right now, a 5K might take me a lot longer than fitter people, and that's Tony's role, is really about building that foundation and assisting people. And then we have a local market analyst, Francois Duplessis, who's also there to assist clients with strategies, market insights as and when they need. So we're covering 3 braces, and I know that there's something really exciting that we're working on in the background that I can't go into, unfortunately, but that's going to pave the way. And I think that's the biggest thing is access to information, knowledge and education. I think the core of ATFX and what we do is education, and we've got some exciting things to come. But as a starting point, we've got our website, our market analyst, as well as Tony, who can even assist you with just learning what is MetaTrader 5, what is a lot, what is a pip, and slowly but surely we walk that journey with clients.
And they I would go there and discuss like what is the strategy and how do I get the psychology part out of it, and how to build a strategy, how to learn strategies, how to test them. That's what I would do if I was an individual trader, essentially. Cool. I'm going to check if there is a question from the audience about this stuff. So just raise your hands and the microphone will come to you. There's one over there, I think.
Hi, great presentation. So my name is Netemba Mchunu. I'm a student at the University of Cape Town doing honors. I did a bit of, So I will say, my name is Netemba Mchunu. I'm a student at the University of Cape Town doing information systems and finance. So my question is around, like from an individual investor point of view, like what has been your biggest loss and what lessons have you learned from it? And I think, Linton, you touched a bit on it. So can you also expand on the lessons that you've learned? And then the second one is, like, when you first started out, what is the one thing that you wish you knew that would have set you apart, in this trading journey?
I'm going to start with your second question first, I think.
That's a part.
Yeah, so starting out in trading was an interesting journey for me. I was in the real estate industry, and the 2008 market crash happened, and I was in a position where I needed to augment my income. My father was into the commodities world, and he said to me, you're a numbers guy. Have a look at this and see if it works for you. And it didn't take very long for the bug to bite. I put some money into a trading account, and I doubled it in a week. And I thought to myself, oh, this is easy. Why haven't I been doing this forever? We can just do this going forward. I can quit my job and everything's sorted. And in week 3, I managed to lose everything, not only my initial capital, but all the profit that I'd made. And the lesson that I took away from that in answering your question is, I wish that I had spent a bit more time getting the right foundation into place from an educational perspective before just thinking trading's easy. Because obviously I was just very lucky with the first couple of trades that I placed. I followed some bias. I was influenced by people who said, we're buying X and Y and Z now, and I decided that I was going to do the same. And luckily the first few calls were right, and the next few calls were wrong. So to answer your second question, it's definitely getting the education right first before just putting money into account and starting to trade. That's answering that question. Answering your first question, it goes back to my experience that I had when I got back into trading after being ill with COVID. And I learned that you often hear people speak about having a trading checklist, having this list that you go through and making sure that you tick all those little boxes before you enter that trade. And at that time, I wasn't doing that. I didn't have a checklist because my strategy had been working for me for years, and I was making money from trading, and I wasn't concerned about the fact that I didn't have a checklist. And I think that was the key takeaway for me after that was knowing that I need to have that checklist in place. And if there's one of those items, whether it be the exact level that I was looking at, whether it be my mental state of mind, am I in a good mood, am I in a bad mood? Even that can be on your checklist as to how you feel that day. And if one of those boxes aren't checked, don't take the trade. I often say to people when I chat to them about learning how to trade, not being in the market is also a position. You can make a decision to not be in a trade. You can make a decision to say, listen, hey, there's some crazy stuff going on in the markets right now. We don't know what the next comment is going to be at Parliament. We don't know what the next comment is going to be from Trump's perspective regarding tariffs. Until we see the next little bit of news, I'm staying out of the market. And that's also a position. You've made a conscious choice to not trade. Don't have FOMO. That fear of missing out on the markets is probably one of the biggest killers from a trading perspective. That's my key takeaway from that experience.
Cool. Any other question? I have a question, which is actually I wanted to know in Africa, what's the biggest social media influencers right now? What are the big ones that everyone talks about when you see?
ATFX.
No, I meant like platform, like is it Facebook and?
I suppose it depends on age, really. So, yeah, for my mom, Facebook. For people younger than me, I mean, definitely TikTok. I'm not on TikTok myself, to be honest. I enjoy a lot of YouTube, so I think there's a variety and different demographics tick those various boxes. So it's really spread out, but it's all dependent on age, really.
Great. So we have time for one more question. I think,
there you go.
or two, or three.
Yeah.
Over here. Yeah, we can start anywhere with.
Linton, can you hear me? Hi. Morning, guys. Afternoon. It's a question
Yeah,
for
a bit
Linton.
louder, please. Yeah.
It's a question for Linton. Was there any psychology books that stood out for you that helped you through your
Any books?
improving your psychology journey? If this is a platform to you, allowed to
Who's
say.
the book guy here? There's plenty of books. I know you can Google it.
What's my psychology book came by the name of a doctor somebody. So I went and I actually spent time with somebody to help me reframe my mental perspective. I did dive into some research from a book perspective, from a reading perspective, and I just found that the material I was consuming didn't actually help my psychological state of mind. I needed someone that could actually talk back to me and tell me, what you're thinking is actually okay. Or what you're thinking is just ridiculously stupid. Don't do that. So I found that books weren't the best resource for me. But I think that will differ from person to person, dependent on your personality. And again, that's part of the psychology of it. I spent time with someone that helped me get through it.
Hi.
My name is Dumi. I'm also a master's student
A little
at
bit
UCT.
closer, please.
My name is Dumi. I'm a master's student at UCT. So my question is quite similar. I just wanted to know, is the psychology of trading something that you learn throughout time? Do you have to go out of your way to do it? Or does it come as you go and trade? Or do you have to actually go look for videos, certain books, or things that you have to know about trading psychology?
Shall I take that one again?
Yeah, go for it.
You want to go for it, Caleb?
I can give it my opinion.
Yeah, do that.
I think it's a bit of both. I think that, if we look at sports stars, there's guys like Lionel Messi that things come to naturally, and then guys like Cristiano Ronaldo that had to work extremely hard. And I think a lot of the time there's cross-pollination of principles, but when there's money involved, there seems to be a lot more care and looking at the phone. And I think that I would spend more time in figuring out myself and what type of trader I am and what makes me tick and what doesn't make me tick, and then look for the resources to assist me. And then you'll find, we've seen guys, start trading and they've flown, and then we've got guys that take 3-4 years to grasp the concept. I think it's important to understand that it's your journey and your race, and run it at your own pace. People learn at different paces in life, and I think that's important.
Great. We have one more question here
Yes.
as well, and then that's it. One more.
Right. Take this one. Yeah.
Hi, my name is Shamima and enjoying the discussion. Maybe because I'm a psychologist, a seasoned psychologist and a new trader.
Okay.
So just some thoughts that came up as you were chatting and looking at the heading. And I thought it would be beneficial for everyone as well, but I do have a question. People have a money personality, and maybe that's the precursor to understanding psychology. We all have some story behind our relationship with money. And as much as we'd like to believe that we trade based on the thrill of it, we tend to repress the real reason, which is money. And I think it's that attempt at trying to defocus what we wanting to achieve is where there could be some psychological upheaval. So I thought I'd just share that. So the bias is actually the expectation that if I have my strategy in place, I'll win, right? So do you think that there is a lack of psychological preparedness for loss in the industry? And do you think this is perhaps linked to risk management? Thanks.
Yeah, most definitely. Again, it comes back to the education, right? So there's a disconnect between what people think they need and what they actually need. I couldn't agree with you more from the psychology side. It is about the money at the end of the day. That's why we trade. But yes, it's a situation where I feel like people make the move too soon, and you're not prepared for that loss. And when you experience that first big loss, it impacts how you trade going forward, whether you want to admit it or not. When there's real money on the line, you take that loss, it impacts you. And I think psychological preparedness for that would be key. Understanding the pitfalls of your strategy are as good as understanding the winning structure of your strategy. So knowing that no strategy can be successful all the time is something that you have to embed in yourself before you start trading. If you hear someone say, "I've never lost a trade," I'll show you a liar. It's not the truth. It's impossible. It's impossible. So you've got to be prepared for that. You've got to understand that even the greatest strategies might lose 3-4 times out of 10 trades. I know someone personally who only wins 3 trades out of 10, but he's massively profitable because his risk to reward ratios are really, really good, like 10 to 1. He really makes good money. And it's just because he's consistently applied the rules of his strategy without ever bending those rules. And he's very, very successful like that. So it's not about just wanting to win all the time. It's about being ready for those losses and being able to move on after experiencing them. Yeah. Thank you for that.
Great.
Yeah, you
That's
should
it.
be treating the losses as it is lessons. Know what mistakes you have made so you can go back, try and correct it, and move forward from there. So loss is a lesson at the end of the day.
Yes, I agree with that. Thank you so much. We are out of time. So
Thank you.
Thanks to the panelists. Okay.